Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading Corporation. Thank you for tuning in to our most recent podcast here, The Secret War on Cash, where we look at the ever so changing world of our financial system, our country, our currency, the world. And it's been quite a lot of changes here, especially over the course of the last couple of years, some of which we're going to get into today. Today is not my best speaking day. My tongue seems to be a bit tied. I have with me my frequent co-host, Chris Agelastos. Chris, how are you?
It's a beautiful spring day, so I'm doing well.
Why are you chuckling? Because I can't talk today?
Well, that, and because I always say I'm doing well, and I just thought I'd add the spring thing. So
mix it up. We appreciate that.
Yep.
Well, it is springtime in Arizona here. It is beautiful, but you say that. And yesterday we had a late afternoon huge storm that brought very cold temperatures. And for Arizona, I mean, in the evening time in late March, we were in probably the 50s, maybe even the high 40s. So
yeah, it's been all over the place lately.
Very strange. Almost as strange as the times that we live in, especially when it relates to the economy, when it pertains to our financial markets and everything that's been taking place there. So let's get right into it. I mean, the first headline we have here is 3 factors why gold will glitter in 2024. Now, this is highlighting 3 factors. I would suggest or argue, if somebody would like to, there's actually probably more factors there are more factors than that. But the 3 highlighted here, Chris,
Yep.
They're talking about how the Fed is likely going to cut rates. They're talking about a weaker dollar and the geopolitical tension, which that is it's been a huge factor. Those are kind of related, if you will, I guess. But the bottom line is that those 3 factors alone: interest rates, weaker dollar, geopolitical tension. These are things that are literally by the day seeming like they're picking up momentum. And so, without getting too much into the article here, these factors, I mean, do you think these are the 3 most important factors that are going to cause gold prices to take off in 2024?
Well, I mean, they're definitely some of the big ones. Central banks, continuing to buy. Obviously, we mentioned the cutting of interest rates. Another one that they mention here, which I didn't really think about until I read it, is that lower bond rates. Bonds are paying lower rates, and so it's pushing people into something that's tangible, that is producing better returns, which is gold right now. So that's another one to add to it. Obviously, just the inflation and lower dollar. Values pushing gold prices up too. So yeah, I mean, they're predicting, and this is JP Morgan, which, historically, they don't necessarily push precious metals, right? They want everybody trading in the stock market with them, but they're expecting something near 2,500 or so, touching that number this year, 2024, and they expect it to continue to rise in 2025. So a lot of things pushing it. And I do tell people, because inevitably, let's say the central bank or the Fed, lowers interest rates this coming June, and that same day gold prices don't go up. People say, well, wait a minute, there isn't a correlation. But I want to remind everybody, it doesn't all happen in the same on the same day that the news comes out. You have to look over time. And if we look at gold prices 2 years ago, last year, today, we're seeing a trend upwards. Doesn't mean there aren't going to be little dips along the way. I tell people it kind of looks like a stair step pattern where, maybe it goes up by $40 and down by 10, and then up by 10 and down by 5, but it's still climbing. And that's what people really need to pay attention to.
Sure. And, it's the interesting thing about this article is, they again mentioning cutting rates, weak dollar, geopolitical tension. They're all 3 related. I mean, as rates get cut, that means money's investments do not want to come into fixed rate type vehicles here in the U.S. because rates are low, which in turn forever has been like when you have low rates and you don't have people coming into your market to buy your debt, that creates a weaker dollar. And then really the all-encompassing term here, the geopolitical tension. That is a very large blanket in terms of a
Mm-hmm.
term to use as it relates to what's going on in the economy here in the United States.
Yeah.
Because we don't have really a domestic economy to speak of any longer, not like it used to be 20, 30 years ago.
Right.
And geopolitical tension, that's just a kind way of saying that there are a lot of pressures that are building
Mm-hmm.
financially in our system right now because of what's going on or taking place around the globe, which is a perfect lead
Yeah.
in to the next article we have here, because this is what we've been talking about for quite a bit, and that is BRICS.
Mm-hmm.
You know, the headline of this article talking about now this article, BRICS, which started off Brazil, Russia, India, China, and South Africa, is an alliance that now a few dozen other nations have jumped on board with. That, and as this article says, they're talking about their gold holdings, which they
Mm-hmm.
thought were 2250 or reported to be 2250. But then they go on to say how China, they might be holding as much as 5,300 tons of gold, but
Yeah.
more specifically to advance the de-dollarization agenda. And
Yeah.
that's the scary thing. That de-dollarization agenda would fit right in line, in my opinion, with geopolitical tensions. And it's
Yeah.
tension. There's tension there because number one, these nations are tired of seeing the dollar, be the bully on the financial block that can go around and tell everyone what to do. In the majority of cases, that's happening to the detriment of their currency, meaning that because of
Mm-hmm.
the need to be dollar driven or dollar centric in this world, it has caused their currencies to take a far back seat, and hasn't been healthy for the advancement of their economy. But
Yeah.
so you have that dynamic, but then you also
Mm-hmm.
have, and we've talked about this numerous times, and I probably will talk about it numerous times more. You have Putin, who's kind of one of the ringleaders here with BRICS, who is just gleeful about the fact that this whole initiative that we know as BRICS is going to create this de-dollarization agenda. They want to see the dollar fall.
Yeah. Yep.
So this all being said, I mean, at the end of the day, Chris, when you look at the amount of tangible assets they have, you look at the strength of the nations that are now forming this alliance, the how our gold price is not going to explode, but more importantly, this geopolitical tension that would drive gold prices, this doesn't look like something that's slowing down anytime soon.
No. No, and I mean, in fact, they say right in the article that BRICS over the last 15 months or so, coming up on 2 years here shortly, have been the largest buyers of gold, BRICS nations. So they've been acquiring it. Not only that, they're doing it kind of covertly, hiding the real numbers, like they're talking about here. I mean, basically, we're thinking that they have twice as much as they've admitted to. So to me, that also means maybe they could have 3 times as much. We don't really know. And obviously, with their goal, which they're very vocal about, of de-dollarization and ditching the dollar, if you will. My parents used to always tell me, pay more attention to what you see people doing, right? Like actions speak louder than words. What are they doing? Not what are they saying? Well, they're saying they want to ditch the dollar. They're hiding some of their purchases, reporting lower numbers than what they really have. All of this adds up to their pushing this agenda forward to get rid of the dollar and push their own currencies. So it's definitely a perfect storm for gold. I mean, it's good for us that own gold and hold it. Albeit it's a bit of a catch-22 because I also want my dollars to retain their value. But that's why we need to have precious metals in our portfolios to diversify ourselves and not be solely reliant on the U.S. dollar. There was a time maybe you could do that, and maybe it was 20 years ago, 30 years ago, but I just don't think it's today.
Yeah, and well, if you piggyback this article with the earlier one with J.P. Morgan talking about those three factors driving gold, what's very interesting about that, and that's why I said it's a very curious, broad term that they use, this geopolitical tension, because that could mean any one of a number of different things. And I personally, I would say that for the average person who would read that and forget the fact we just talked about this second article here, geopolitical tension could just mean that, sanctions are being invoked against someone, or, there are trades that are being blocked, or, products that can't no longer flow in and out of the country.
Right.
It could be a number of different things, but here's what's interesting. Yes, it is geopolitical tension, meaning this de-dollarization effort. So again, Putin saying, "Hey, we want to basically crush the U.S. dollar." That we could take that as tension.
Yeah.
But what's a little unique to this situation is it's not just that tension, and they're talking about this tension is going to be what causes gold to go up. But in addition to that, there's tonnage of gold being purchased in the process, which that's what's very unique. In other words, it's not just the factors, but in turn, they are also buying the very commodity that's related to that geopolitical tension. So that's what makes some of these predictions, many of which we've discussed over the last several months, of $3,000 an ounce gold by this year. It may be cheap, but if things continue at the rate that they're going, but if nothing else, that $3,000 an ounce gold seems like a very viable price point.
Yeah, I mean, it's supply and demand, right? They're gobbling it up. They're controlling the supply. That, along with all those other factors, continuing to push prices up.
Right, 100%. Well, thank you so much, Chris. It's already just a short step into the year 2024. And we have had more than I even anticipated to talk about as it relates to prices of gold, BRICS, and some of the developments out there. But for sure, there will be more to come. For those of you tuning in, if you have not contacted our office to receive your free report of the secret war on cash, do so immediately. You can call us at 800-289-2646 or visit us online at SwissAmerica.com. Please leave us some comments. Let us know your thoughts on this. And if you're not following us on social media, please do so. Chris, thank you so much. And we will look forward to having you again here real soon and sharing some of these insights. So for those of you tuning in, have a great rest of your day. Thank you.